Today we are going to see about what is primary market, what is secondary market, and IPO, FPO, and book building. So let me come with an example first. What is primary market? Before that, we want to know about what a stock market is all about. Stock market is nothing but the uh, if I want to start a business, if I am not having a certain amount of money or capital in my hand, I want to go with stock market or share market. If I am having an idea of starting a import export business, which where I need some certain amount of money like 25 lakhs. If I am not holding that amount, I what I can do is I can ask that 25 lakhs to the general public. So for that, I want to register myself, my company under National Stock Exchange as well as Bombay Stock Exchange, uh, and I want to proceed for further thing. So primary market is nothing but the first time when I issue the share of the particular company, then it comes under primary market. So if you take a individual investor or a corporate or a institutional investors like banks and so on, what they will do means they will ask for it. If I am let me take a recent example. Before 1 year, Zomato, you all know about Zomato. Zomato is they come as an IPO, initial public offering. That's it's all about primary market. So initially they are gets into the stock market. When they come to share market, the capital total capital will be divided into the certain number of shares so that each share price will be fixed. I think 60 rupees or Zomato shares comes to the market like IPO, initial public offering. So if I like to buy Zomato shares, I can able to buy with my help with the help of my uh, uh, banks and brokers and so on. So there is a agent, brokers as well as institutional advisors and so on. They will be there. So as an individual investor or a corporate or a institutional investor, I can able to buy the new share into the stock market, NSE or BSE before listed to the stock market. I can able to buy those shares in uh, I can buy those shares. That's it's all about IPO, initial public offering or primary market. Through bank, I can able to purchase the share of the particular company or an organization. If I buy that particular share, I will be the owner of that particular company or an organization. Ownership will be transferred to me also. So there is promoters. Before that, we want to know about what is promoters, what is individual investors, and so on. When individual investors is also called as retail investors, where the individual person can invest in shares or any shares in NSE or BSE, National Stock Exchange or Bombay Stock Exchange. If it is a corporate companies, they will use certain amount of capital for their business. Certain capital they will left as such. Such, uh, such capital they will make use of investing in some other companies so that comes under corporate investor. A corporate company will invest in certain shares. So that's the thing. That's one of the example for corporate investors. If you take promoters means, let me give an example, Reliance Industries. So Ambani is one of the biggest promoter of Reliance Industry. Next, if you take Adani, Adani is the promoter of Adani groups, Adani related all shares. So they are all promoters. So promoters is nothing but the particular person who is having large amount of shares in that particular organization or company. We will call it as an promoters. Next, if you take institutional investors like banks, centralized centralized banks or private banks and public banks, they will invest in certain shares. If you take, let me come with one example. Uh, if you take HDFC Bank, if operation of the particular organization and company is it's going to be a good, or it going to reach next level, they will definitely they will invest, or they will buy that particular share and they will hold as an investor, institutional investors. So financial institution is nothing but, you all know, it's all about banks. Banks, instead of providing loans, they will hold the shares. They will hold the shares of certain companies. So that's all about institutional investors. So primary market is nothing but when a new organization or company gets into the stock market without listing or unlisted. Before unlisted, we can able to buy that particular shares. So certain example is, if you take HDFC, AMC, recently why comes ERTC, every shares when they come to stock market as a public sector, it's all about primary market or initial public offering. We will call it as an IPO. Initially, we will provide our shares to the general public. We will call it as an IPO. So all new shares, that particular national stock exchange, Bombay stock exchange, will give the advertisement for the particular company that like so and so, Zomato, so and so company is coming for as an IPO for that particular day. You can buy that particular IPO for those 3 days with the share price of 60 rupees and so on. So this is all about IPO. So if you take secondary market is nothing but already listed companies. We will call it as an secondary market. You know, the term I used, listed and non-listed. Listed is nothing but the shares which is traded in NSE, BSE. We will call it as an listed companies. Unlisted is nothing but the company which is not yet traded in NSE or BSE. We will call it as an unlisted company. So secondary market, we will buy and sell. The market, you all know, market is the place where buying and selling takes place. This is the secondary market where buying and selling of share will take place. So stock exchange will be an intermediate where in between the both individual investor or retail. Till now, I have explained so much of retail investors, institutional investors, promoters, and so on. There will be an exchange of buying and selling of shares between those participants of stock market. So between those people, stock market like NSE, BSE will act as an intermediate. So few people will buy, few people will sell that particular shares. It's all about trading. This is all about secondary market. Secondary market, it's related to secondary market as FPO. If the company wants to expand their business to the next level, or they want to diversify their business to next level, then they want to go with FPO, follow on public offers. So if I am having certain amount, 25 lakhs as an capital, I want some 10 more lakh for the for my smooth running of my company. Then I want to raise the 10 lakh in FPO, follow on public offer. So recently more companies given FPO, like especially cement industries, like Dalmia Cement and so on. They are rising. They want to raise their capital, market capital. So they are asking for follow on public offer. Just I want to expand or diversify my business. So I want certain amount of capital. So public can invest in my invest in this company and so on. FPO and IPO, it's all about raising the capital. If you take an organization or company without market capital or capital, we can't run that particular business. If you take IPO and FPO, it's all about raising the capital. IPO is nothing but for the new company, we want to raise the capital of the particular firm. FPO is nothing but already listed and trading company, which is under a National Stock Exchange and Bombay Stock Exchange. We want to raise further more capital. We can go with follow-on public offering. This is all about FPO. Next one is last one, book building. So book building is nothing but before IPO, they want to fix the share price. So if I am going to start a business for 10 lakh rupees, so I want to have share price less. For 10 rupees, if I am having my share price, then more number of people will buy my shares. So for that, I want to give some 1,000 numbers of total number of shares. 1,000 total number of shares, 10 rupees per share, as well as to meet out my 10 lakh rupees of market capital. So book building is nothing but few people is not aware about how much share capital I can keep, whether my valuation of the particular share will as worth as it's. So that what they will do means before giving advertisement on IPO, they will fix the price band. Like if the share price is 500 to 525, likewise. So if you take HDFC AMC, when they come as an IPO, they fixed the band price as 500 to 525. If the demand of share is HDFC AMC, if demand of the share is more, then they will fix the share price as 525. If the demand of the particular shares is less, then they will fix as 500. Based on the capital will arise and arise or rise. Based on that, the particular company or organization will function. So this is all about book building. Book building is nothing but the process of identifying the share price among the public, whether they can able to how much the particular organization worth enough or value enough to hold that particular share price, whether they can, whether the demand of the particular, based on the demand of the share band will be differentiated. If the demand of the share is more high, then the high price brand will be fixed. If the demand of the share price is low or less, then there will be a less bandwidth or less price of shares. This is all about book building. Yes, thank you.